They might not know who the counterparty is when they're transacting in a dark pool. So at least from that perspective, which sounds simple, is another one of those just like obvious big reasons there's been a lot of adoption. I think why we're excited.
And the third one I'm very interested in that we're like working on building a pilot with a certain institution on is around dark pools. So in TradFi, you have these kind of private ledgers where there's like privacy, but there's a lack of fairness guarantees. So what's interesting is crypto has fairness guarantees with smart contracts, but we lack the privacy. And so if someone can make an on-chain dark pool that has fairness guarantees and privacy guarantees and has liquidity, you actually have a structurally better product. So
if you guys are tired of all the bullish Moonboy hype, the hopium, the extensive price predictions, the being left in the dark after price pumps, and then you're stuck wondering why it dumped instantly after a price pump or a manipulative move. Alrighty, everybody, what is going on? Welcome back to part 2 of the previous video breakdown. We were showing you all institutional grade order flow, dark pools and deltas in multiple different asset classes, whether it's crypto that you invest in or day trade, whether it's NASDAQ, the stock market, commodities, or FX that you might day trade or participate in, using institutional information in this new data-driven environment that is ran by algorithms and artificial intelligence is of key importance. So in today's video breakdown, we're going to go thoroughly through this document shared inside the private CYPRX Discord that breaks down our institutional grade software in detail to our private community members. Now, of course, we're going to start here on page 12 that discusses and talks about what a dark pool or iceberg order is and what our institutional software actually provides. And we'll save page 1 through 12 for the private community members. So you guys are going to get insights into the dark pools. We'll save the delta information for those of you all who want to take the initiative to come tap in with us in the private CYPRX community and gain access to this knowledge, this awareness, and this software yourselves. So starting off here, and remember, these dark pools, these deltas that we give our community members access to can be used across multiple different asset classes. Doesn't matter if you're a dollar cost averager or a day trader, a stock investor. As a market participant, it is extremely important to have access to this type of information as we head into this new digital era that is driven, again, by algorithms and AI. To understand how large institutions operate in financial markets, it is important to understand the concepts of iceberg orders and dark pool orders. Both are tools used by large participants to manage significant amounts of inventory without revealing their full intentions to the public market. An iceberg order is a large order that is intentionally hidden from most market participants. Only a small portion of the order is visible at any given time, while the remaining quantity stays concealed. As the visible portion gets filled, another portion is automatically revealed. This process continues until the entire order has been executed. The reason institutions use iceberg orders is simple. If they displayed their full size to the market, other traders would immediately see the large interest and react to it. This could cause price to move against them before they complete their transaction. Imagine a large institution wanting to buy a substantial position. If the entire order were displayed, traders would likely begin buying ahead of it, pushing price higher and making it more expensive for the institution to complete its purchase. By hiding most of the order, the institution can quietly accumulate inventory while minimizing market impact. The same principle applies when selling. A large seller may use an iceberg order to distribute inventory without causing an immediate collapse in price. This is why iceberg orders are often associated with absorption. Traders may observe aggressive buying repeatedly entering the market, yet price struggles to move higher. What is often happening is that a large hidden seller is continuously absorbing those buy orders through an iceberg order. To the average trader, it may look as though buyers are strong because aggressive buying is visible. However, the hidden liquidity is preventing price from advancing. Eventually, once the buying pressure is exhausted, price may move lower because the larger participant has successfully defended the area. Dark pool orders operate on a similar principle, but in a different environment. A dark pool is a private trading venue where large institutions can transact away from the public exchange. Orders executed in dark pools are generally not visible to the broader market while they are being placed. This allows institutions to buy and sell large amounts of inventory without attracting attention or influencing price in the same way that public orders might. The purpose of a dark pool is to reduce market impact. If a pension fund, a hedge fund, an asset manager, or another large institution needs to execute a substantial transaction, doing so in the public market may create unwanted volatility. Other traders may detect the activity and adjust their behavior accordingly. By using a dark pool, institutions can match large orders privately and efficiently while reducing the likelihood of adverse price movement. Although traders cannot directly see every iceberg order or dark pool transaction, their effects often become visible through price behavior and order flow. Areas where aggressive buying or selling repeatedly fails to move price are often clues that hidden liquidity is present. Markets frequently stall, consolidate, or reverse at these locations because large participants are absorbing incoming orders while conducting business. This is one of the reasons why iceberg and dark pool activity often leads to important support and resistance zones. These areas are locations where significant inventory changed hands, where institutions demonstrated a willingness to defend a position. When price returns to those zones in the future, the participants who previously traded there may still have an interest in protecting their inventory, adding to the positions, reducing exposure, or managing risk. As a result, price often reacts when revisiting these areas. A zone where a large hidden buyer accumulated inventory may later act as a support because demand reappears when price returns. Conversely, a zone where a large hidden seller distributed inventory may later act as a resistance because selling pressure returns as price revisits the area. Even if the original transaction occurred long ago, the market often remembers these locations because of the substantial volume and liquidity that was involved. For traders, the key takeaway is that support and resistance are not always created by visible chart patterns alone. Many of the most important levels originate from hidden institutional activity. Iceberg orders and dark pool transactions represent areas where large participants quietly accumulated distributed inventory, and these zones often leave footprints that continue to influence price long after the original trades have taken place. Understanding this helps traders think beyond individual candles and instead focus on where meaningful business was conducted by the largest participants in the market. So, breaking down our software, which is specifically designed to identify these areas, deltas and dark pools and icebergs, where significant institutional interest may exist before the majority of market participants become aware of it. The goal is not simply to show where transactions have already occurred, but to highlight zones where large pools of liquidity, hidden interest, iceberg activity, and institutional order flow may still be waiting to interact with price. One of the reasons that these levels are so valuable is that institutions rarely complete all of their business at a single price. Large participants often need to accumulate or distribute inventory across a range of prices over an extended period. As a result, many important institutional zones continue to influence the market long after they are first created. These areas can contain resting liquidity, unfilled inventory, or participants who still have an interest in defending their positions. Our software is designed to locate these areas in advance, allowing traders to monitor them before price arrives. This is why members frequently see price react at these levels, where they were identified well before the market reacts to them, as I showed you all in part 1 of today's video breakdown. When price approaches one of these zones, it is often entering an area where significant institutional activity previously occurred or where meaningful liquidity may still be present. The reaction that follows are not random. They are often the result of large participants continuing to manage inventory, defend positions, absorb order flow, or complete unfinished business. This is also why these levels frequently become support and resistance. Markets tend to remember areas where substantial amounts of inventory change hands. When price returns to those locations, institutions, trap traders, profit takers, and other market participants often become active again. This result is a concentration of liquidity that can cause price to stall, reverse, consolidate, or accelerate depending on how market participants interact with the zone. A useful way to think about it is that most traders focus on what has already happened, while our software focuses on identifying where important business may still need to be conducted. Instead of chasing price after a move has already occurred, traders can prepare in advance by knowing where significant liquidity and institutional interests are likely to exist. This is why you will often notice price reacting with remarkable precision around the levels provided by the software that we provide in the CYPRX community. These reactions are not based on traditional support and resistance lines drawn after the fact. They are based on the underlying market structure, institutional inventory, liquidity distribution, and the footprints left behind by large participants. As price returns to these areas, the markets frequently acknowledge their importance, creating the reactions, reversals, consolidations, and breakout opportunities that traders and investors observe every day. The key takeaway is that markets are driven by liquidity and inventory. Institutions require liquidity to enter and exit positions efficiently, and that process leaves footprints. By identifying those footprints before price arrives, traders can gain insights into where meaningful market reactions are most likely to occur, allowing them to anticipate opportunities rather than simply react to them. So, of course, how can we use the dark pools or iceberg prices in our trading given in advance? And then we go into detail with two more slides for our community members on how to do so. And there is an entire educational section inside the private CYPRX Discord. Scrolling up here to the Delta Education PDF section, there are hundreds of educational breakdowns, videos, clips, documents going over how to use this information that we provide our community members inside our Discord. If you guys want access to this, we would love to have you on the team. We are here in an attempt at CYPRX to create a level playing field for every average day retail investors, regardless if you are a dollar cost averager. We have people in our community who are only buying and selling digital assets at our institutional dark pool or delta zones and have walked away with extreme amounts of profit in doing so. We have day traders in our community that trade commodities, forex, and futures, and have achieved a level of accuracy that is extremely uncommon amongst retail investors solely because of the information that we provide inside the private CYPRX community. If you guys are tired of all the bullish Moonboy hype, the hopium, the extensive price predictions, the being left in the dark after price pumps, and then you're stuck wondering why it dumped instantly after a price pump or a manipulative move, head over to CYPRXtrading.com, try out our Discord for a month, test the institutional data and software yourself on whatever asset class that you personally choose to invest or participate in for 30 days, and watch how accurate the software is yourself. At a minimum, I hope that you took something productive away from today's video breakdown. With that being said, we'll continue to provide the most accurate updates in the form of technical analysis across multiple different asset classes, not only to our private community members, but also in the form of public trade breakdowns on pairs like XRP, NASDAQ, so on and so forth. Many blessings to you guys and gals. Be cognizant. We hope to see you inside the private community. With that being said, I'll see you all in the next video breakdown.